February 4th, 2004. A Harvard sophomore launches a website from his dorm room that will change everything. But here's what nobody talks about. 3 other students believe they already own the idea. What happens next becomes one of the most high-profile betrayals in business history. Not because of the money involved, but because of what that money would become. The Winklevoss twins walked away with what seemed like pocket change. That pocket change became a crypto empire worth billions, though still far less than Meta's current valuation. The privileged outsider, from Harvard student to Silicon Valley player. Mark Zuckerberg wasn't supposed to be the one who changed the world. Growing up in Dobbs Ferry, New York, he was just another privileged kid with a computer obsession. His father was a dentist, his mother a psychiatrist. Comfortable, but not Silicon Valley royalty. At Harvard, Zuckerberg was known for 2 things: his programming skills and his complete disregard for social norms. He'd already gotten in trouble for creating Facemash, a site that lets students rate each other's attractiveness. The administration wasn't amused, but his classmates were fascinated. That's when Cameron and Tyler Winklevoss entered the picture. These weren't just any Harvard students, 6'5" twin Olympic rowers from Greenwich, Connecticut. Old money, the kind of guys who expected things to go their way because they always had. They had an idea for Harvard Connection, a social network exclusively for college students. But they needed a programmer. Someone recommended Zuckerberg. In November 2003, they approached him with their concept. Here's where the story gets interesting. Zuckerberg allegedly agreed to build their site, entering into an oral contract. They had meetings, they discussed features, they talked about equity splits. Everything seemed perfect. But Zuckerberg was playing a different game entirely. While the twins waited for updates on Harvard Connection, Zuckerberg was secretly building something else. Something that looked suspiciously similar to what they'd discussed. He called it the Facebook. Think about the psychology here. Zuckerberg saw an opportunity and took it. Not just the technical opportunity, anyone could build a social network. He saw the positioning opportunity. The twins were thinking like traditional business people. Create a product, launch it properly, follow the rules. Zuckerberg was thinking like a revolutionary. Move fast, claim the territory, apologize later if necessary. On February 4th, 2004, Facebook launched. The twins found out the same way everyone else did. They saw it online. Imagine that moment. You've been working with someone for months on your idea, and suddenly they launch their own version without you. The betrayal wasn't just business, it was personal. These were people who'd trusted him, who'd shared their vision with him, who'd treated him as a partner. But here's what makes this story fascinating from a mindset perspective. Both sides believed they were right. Zuckerberg believed ideas were worthless without execution. The twins believed intellectual property mattered. Both had valid points. The legal battle began immediately. David versus Goliath. Except nobody was sure who was David. The twins had money and connections. Zuckerberg had momentum and a product people actually used. For 3 years, lawyers fought while Facebook grew. Every day the case dragged on, Facebook became more valuable. Every user who joined made the twins' potential claim worth more money. The irony is perfect. The longer they fought over who deserved credit for the idea, the bigger that idea became. By the time they reached a settlement, they weren't fighting over a college social network anymore. They were fighting over a piece of the future of human communication. In 2008, they settled for $65 million, consisting of $20 million cash and $45 million in Facebook shares. At the time, it seemed like Zuckerberg had won. He kept his company and paid what amounted to a rounding error. The twins walked away feeling defeated but not broken. They had their money, but they'd lost something more important: the recognition for their idea. What happened next would prove that sometimes losing the battle means winning a completely different war. The Crypto Revenge: How the Losers Built a Bigger Empire. The $65 million settlement should have been the end of the story. Mark Zuckerberg keeps Facebook. The Winklevoss twins get their payout. Everyone moves on. But that's not what happened. Cameron and Tyler Winklevoss did something that would make them legends in a completely different industry. They took their settlement money and made the most prescient investment decision of the 21st century. In 2013, while most people had never heard of Bitcoin, the twins were buying it at around $120 per coin. Think about that timing. Facebook was going public, Zuckerberg was becoming the poster child for tech success, and the twins were quietly accumulating a digital currency that most experts dismissed as a fad. This wasn't luck. This was strategic thinking at its finest. They understood something crucial. They'd been burned by trusting a centralized system controlled by one person. Bitcoin represented the opposite: a decentralized network that no single person could manipulate or control. The psychology here is fascinating. Most people who get betrayed become cynical. They retreat, they play it safe, they avoid risk. The Winklevoss twins did the opposite. They used their betrayal as education. They learned that centralized power could be weaponized against them. So they bet on decentralization. By 2013, they owned roughly 1% of all Bitcoin in existence. When people called them crazy, they doubled down. They weren't just buying Bitcoin. They were building the infrastructure to make cryptocurrency legitimate. In 2015, they launched Gemini, a cryptocurrency exchange focused on compliance and regulation. While other crypto companies were operating in legal gray areas, the twins were working with regulators. They were getting licensed. They were building trust. Remember, these are the guys who'd been through a massive legal battle. They understood compliance better than anyone. They knew that for cryptocurrency to succeed long-term, it needed regulatory approval. So while everyone else was trying to avoid regulation, they were embracing it. The irony is perfect. Mark Zuckerberg, who'd built his empire by moving fast and breaking things, was now dealing with congressional hearings and regulatory scrutiny. Facebook was facing privacy scandals, antitrust investigations, and global criticism. Meanwhile, the Winklevoss twins had positioned themselves as the responsible faces of cryptocurrency. They were the ones regulators trusted. They were the ones institutions worked with. They'd learned from their Facebook experience and built something unbreakable. By 2017, when Bitcoin hit $20,000, their holdings were worth over $1 billion combined. They'd become crypto's first billionaires. But the real victory wasn't financial, it was philosophical. They'd proven that you could build wealth without compromising your principles. They'd shown that playing by the rules could be more profitable than breaking them. They'd demonstrated that sometimes the best revenge isn't fighting back, it's building something better. Think about the mindset shift required here. In 2008, they were the guys who got screwed over by Facebook. By 2017, they were pioneers of a technology that could make Facebook obsolete. They'd gone from victims to visionaries. The twins understood something that Zuckerberg missed. The future wasn't about controlling information, it was about freeing it. Facebook was a walled garden where Zuckerberg controlled everything. Cryptocurrency was an open protocol where nobody controlled anything. By 2021, when Bitcoin reached new all-time highs above $60,000, their net worth had reached around $6 billion combined. The students who'd been betrayed in a Harvard dorm room had built an empire worth billions, though still significantly less than Zuckerberg's wealth or Meta's market value. But the real lesson isn't about cryptocurrency or even about revenge. It's about resilience and vision. The twins could have spent years being bitter about Facebook. Instead, they channeled that experience into building something revolutionary. They understood that the best response to betrayal isn't anger, it's excellence. They didn't try to destroy Facebook. They built something that made Facebook irrelevant to their own success. The feud that started over a college social network had evolved into a battle between two different visions of the future. Zuckerberg's centralized, controlled metaverse versus the twins' decentralized, open cryptocurrency ecosystem. And here's the beautiful irony. By losing Facebook, the Winklevoss twins gained something more valuable. They gained the motivation to build a future where nobody could betray them again. They built a system where trust wasn't required because the technology itself was trustworthy. The $65 million settlement that seemed like defeat in 2008 had become the seed capital for a revolution. The twins hadn't just gotten rich, they'd gotten even. Not through destruction, but through creation. Not through revenge, but through innovation. Sometimes the best thing that can happen to you is not getting what you originally wanted. Because what you build next might be bigger than anything you originally imagined. The multi-billion-dollar transformation, how one vision reshaped everything. The numbers tell an incredible story. When the Winklevoss twins settled with Facebook for $65 million in 2008, Mark Zuckerberg's company was valued at around $15 billion. Today, Meta is worth over $1.8 trillion. You'd think Zuckerberg won decisively. But here's where the story gets wild. That $65 million settlement, invested in Bitcoin when it was around $120, grew into holdings potentially worth around $7 billion as of 2025. We're talking about one of the greatest investment returns in history. The transformation goes beyond personal wealth. The twins' early Bitcoin bet helped legitimize an entire industry. Their Gemini exchange processed billions in transactions. Their advocacy work shaped cryptocurrency regulation worldwide. They didn't just get rich, they created the infrastructure for digital money.